bring this, we're going to look at Japanese yen. We're going to apply the same idea. All right. But before we do that, we're going to look at some yen charts. Okay. All right. Let's look at some yen charts. Why don't we start just with a good old price chart here? Let's go. I think it was this one. No, it wasn't. Where was it? Where did I type these in? Maybe it didn't save. Oh well. Not a big deal. We'll just do it right here so you can see it for yourself. All right, so one, we can make an argument from just a simple Elliott standpoint. Well, first, just look at the damn chart, right? So like look across the chart, like where we are right now. Okay. You see all this over here? That's a lot of stuff to deal with. Okay. Now I will add here as well, like if you don't, there's a caveat here. Okay. So I'm going to go to a weekly chart. Okay. You see this big, thick, beautiful magenta line here? It's drawn off the highs from 1990 and 1998. Extends to the left, it nails the 78 low. That was also resistance, by the way, in 2015, which was an awesome trade. That line is higher. Okay, it's like mid 117s at this point. Yesterday we traded 116.35, so we were actually at one point like 100 pips basically from hitting that level. So my point here is that, you know, if we go to new highs like yesterday's high, then that's probably where you go. And I wouldn't want to screw around with anything yen until then. But it's really like, for all intents and purposes, we're pretty close to that level. So yeah. Oh, here it is. Okay, so it did save. All right, so what we do have here is we also have an Elliott. We have an Elliott count from the low last year, which, oh, by the way, the low for dollar yen last year was, guess what, on January 5th, 1 year ago to the day, right? Today's January 5th. So there's an Elliott count that can be presented here. Okay, wave A up, wave B down, and then wave C 1, 2, 3 with little 3 of C here and 3 as well. 1, 2, 3, 4, 5, 4, 5. Now what I've got here is a extension. This is important. This is an extension on log scale. If it's not on log scale, it's going to be a little different. 115.84 is 2 legs up. If it's on log scale, 2 legs up is 116.24. Okay, we closed yesterday at 116.15, pretty close. Now let's bring in a COT chart. This is yen futures. Okay, yen futures are quoted the opposite or inverse is spot, so it's yen dollar, not dollar yen. It's important to note. At big turns, okay, and this is something that is no secret to anybody, but I expand on it in my my book that was written in 2007, in Sentiment in the Forex Market. But you can see that the big money, the big specs, right? They're hedgers, okay, or I shouldn't say specs, the big hedgers, right? They are not trend followers. They are quite the opposite, actually. And they tend to be right at the turn, right? In other words, they will hold their biggest long position at or near price lows. That's the blue line. And they will hold their biggest short position at or near price highs. Okay. Well, last year in January, they held a big short position. That was the high. Okay. Right now, it is the exact opposite. They recently were very long. In fact, the biggest long position they'd had since October 2018, which lo and behold was a price low in yen. That would mean price high in dollar yen. Okay. And now they've backed off a bit, but I would expect that after the recent move we've had over recent weeks, you'll probably see this tick back up a bit once we get COT data, which, you know, is kind of annoying that it's released with a 3-day lag because it's released on Fridays. It's as of that Tuesday, the data. But yeah, you can see the psychological profile or positioning profile, if you will, is pretty much the exact opposite as it was 1 year ago. So again, we can make a case here for the market to reverse based on everything I just said. All right, so we open the year at 115.10. Let's square that. You square 115.10, you get like 107. Therefore, add 107 pips to 115.10, and you get 116.17. First square root up. I'm wondering if we saw the high for 2022 in dollar yen yesterday, right? Sounds ridiculous to say something like that. I know, you know, it's just some asinine proclamation, but based on, you know, everything that we've looked at, it's not that stupid and that crazy. Anyway, we also had pretty good volume yesterday in yen futures. It was like 1.5 times the 20-day average of volume, which tends to, you know, in the kind of the position or profile that we have with the COT and everything else and the chart pattern and everything I mentioned, you know, might be capitulation. So if we have an update today, which so far we do, and again, update in yen, and if we get a little more volume today, we actually could have a decent signal for dollar yen. Okay, so that will all be talked about later, and trades will be put forth for SB members when and if appropriate. So there's dollar yen. Okay, that's my thoughts on dollar yen with the beginning of year logic, and we've seen this happen in yen before, right? I talked about earlier 2015. Well, remember 2017, the open of 2017. So this was the Trump election here, and we went bonkers for a while, and then we ended up topping at the first square root level on the first trading day of the year, actually in 2017. So, you know, this is not, again, not a standalone strategy by any means. Like last year, we reversed in the on 1.6. We did not even make it to the first square root level, but it was pretty much the opposite in terms of positioning and everything else. All right. What about that fancy schmancy inside Bollinger Band monthly thing? Here's dollar yen with that. You can see haven't had the success recently with this as you had with euro, although throughout history you've had some pretty big signals or alerts, if you will, including 1995 low, high up here in 98, low back here in 2011, low here in 2016. We just got one here. Again, we've had a pretty crappy performance with this alert, signal, whatever, for a while. FXY actually did not even get one. I guess the Bollinger Band was not tagged at that point. All right.